Afternoon, guys. Just in Asda car park. April's asked me to get some of this stuff for Christmas, so currently on a shopping trek in Northampton. I want to talk about compounding on investments today, because one of the things a lot of people they assume that the changes you make on, say, stocks and shares, crypto, whatever you're investing in, is an overnight success. It takes time. Firstly, the markets don't jump that much unless there's something driving it. And the other thing with that is, when things shoot up, they're just as likely to shoot back down unless there's something that's driving it significantly. You know, for example, you're a small pharmaceutical firm that has just had a scientific breakthrough which takes your company value from, say, £1 million to 500 million. That would be an example. Generally, the market doesn't have that constantly going on. So a lot of what you want to do is steady eddy type stuff, where you'll see mine, I've got goes from 50 to 70 to 80 down to 54, up and down. It's yo-yoing. But the thing is to consistently keep feeding with some money. Now I've got my stocks that I've picked, what I'm doing is starting loading them up. There's some that are in there for dividends, some there for expected growth, but the key to it is the consistency. Just keep feeding it in there. You're not going to see a lot of movement probably for the first year. There's probably going to be a sorry, I'm trying to get around the bus. It's going to probably take a couple of years before you start seeing something of note. Because even with my ISA account, I've got another account with about 20,000 in it. That moves in some weird ways, in the sense of it could be down £1,000, and then within a week it's up by 300. And this is my point: it's not easy to just map and assume that it's just going to go up every month. It goes down, goes up, goes sideways. You get dividends come out. It's just that you keep feeding it, and once you get to a certain point, you may start thinking, well, I want to start taking some money out on a monthly basis, which you'll be able to do. But the key to it is getting to a point where it's not taking anything out isn't going to impact your investments. You want to be just taking off the top the dividends. You want to be taking off additional interest. The values have gone up. But ultimately, you want to keep growing it. I mean, my personal view is I'm looking at trying to get the investments up to about $250,000. Not sure how long it's going to take me, but that's my goal. And part of that is not making any stupid jumps, which is, if you start speculating, you're moving from investing into gambling. And the problem with gambling is the opportunities are often the other way around. You lose more than you gain. So that's why I do recommend keeping it steady unless you know something. It's a bit like what I put in nuclear. I know something's going to happen with nuclear. I can see it coming. There's other stuff going on in that sector. The same as you see, I put a lot in different pharmaceutical companies because they've got a lot of patents and things they're working on. They've got growth in them. Now, do I know what that growth is? Am I talking 100x or whatever? I have no idea. I just know, even with Eli Lilly where it sits now, it's fine. Eli Lilly has got, he does the fat jabs, he does insulin, it's got consistent growth, and that's what I'm looking for. I'm not gambling. I'm not expecting overnight success. And I'm not saying this as if somebody's complained at me, by the way. I'm saying it because it takes time. So when you're sitting there thinking this doesn't seem to be work, it's a waste of time. That's what most people do. Those are the ones that fall by the wayside. It's the same in business. You know, when people say most businesses fail in the first 6 months, that's because people wake up to the fact that a lot of businesses are bloody hard work. A lot of businesses were stupid ideas. A lot of businesses, you have to grit your teeth and just keep going when everything around you is failing, because you need to make it work. None of it's easy out there. If it was easy, everybody'd have it, and if everybody's got it, it devalues the whole system. Why? Well, it's just maths, isn't it? If everybody has £1, the pound is obviously going to go down in value, because everyone will do less for £1 because the value of it is dropped, because everyone's already got it. So yeah, it's a long road. It's not always upsides, there is downsides, there will be crashes, but one of the things my own thing is, whatever happens in the markets, I just keep it. You know, I'm not preparing to sell anything off unless I see something that bothers me, and that's probably going to be ethical rather than anything else. Because quite simply, keeping it consistent, keeping the regular investments, and just watching it develop over time, I'm alright with that. Another thing with the compounding that you've got to be aware of is you don't get your dividends every week. It's not like a paycheck on a Friday. So some of these dividends won't appear for up to a year. So it may be, oh, that's a complete waste of time just having that. And then the dividends comes in, and then you can see some growth that you hadn't factored in, because unless you sit and work out what the dividends is, when it's going to be paid, etc., you may not be able to see the full potential of what your portfolio is doing. On top of that, dividends may not always get issued as well for various reasons. So I'm just bringing up the fact that it's a long road, but stick to it. Thanks for listening.